Hey everybody, welcome to Mortgage Today for Monday, August 21st, 2023, and oh, what a day it was. MBS started the day down 47 basis points on the open. It was down 8 basis points while I was typing my initial post. Stocks were up 21 on the open of the market. We were weaker in Asia and Europe overnight, modest follow through so far in the morning. The upcoming week will be dominated by the Jackson Hole Summit. The two main topics will probably be China's collapsing real estate bubble and the surprising strength of the U.S. economy. Jerome Powell will speak on Friday. I think the elephant in the room at Jackson Hole will be China, not U.S. inflation, and the concern will be that Western banking exposure to the collapsing China real estate market. As far as economic data, we'll get existing home sales, new home sales, and consumer sentiment. The 10-year bond yield has picked up 36 basis points since the end of July. Meanwhile, the 2 to 10 spread remains highly inverted, although the yield curve has shed some of its inversion, increasing from negative 91 basis points to negative 63 basis points. There's no real end in sight to watching these rates rise, no reason to be floating really in general. The consequence to being in a perpetual state of locking is at some point you will lock at the worst rates in decades, but we won't know it until it happens. However, the alternative would be floating and waiting for a air quotes correction, and that has proven to be a strategy that leads to tragedy. Until there is fear again, rates are not dropping. Higher for longer, they said, and they weren't kidding. After a mini banking crisis in March, rate watchers were hopeful that the visible consequence of the rate surge meant that the big corner had been turned in the big picture of things. But in May and June, the Fed is increasingly unconcerned with bank risks while they continued reiterating higher for longer messaging. Markets were slow to take them for their word, but in the surprisingly not bad economic data in July and August has worked to change some of those opinions. There have been some complicating factors over the last 2 weeks, but rising rate momentum is still mostly about the economy. As such, it's the economy that will need to demonstrate a shift before we see meaningful relief. Until then, the path of least resistance is the path we've been seeing. Today is just another day on that path. Higher for longer. MBS capped the day being down 33 basis points. Stocks increased 33 points on the S&P 500, so we're closing out the 5.5 at 97.34. We actually bursted below that S1 Fibonacci retracement at 97.13 before coming back up to close on the day.